So in this video, I'm going to tell you what my long-term 2023 stock market investing plan is. So you may have seen Michael Burry popping up again all over YouTube, this time for a different reason. He's saying this time that he was wrong to say to sell and how everyone's buying the dip like crazy. Now, I want to provide a different perspective instead of just dancing all over Michael Burry, right? Because aside from his big short that he's famous for, at the end of the day, Michael Burry is a value investor. And you can take a look at his past 10-year stock performance, for example. He vastly does outperform the S&P. So despite what he's famous for just being the big short, he is not just a one-trick pony. At the end of the day, he's a value investor. So let's take a look at Michael Burry's words through the lens of a value investor. Where's the market today? Well, the S&P 500 today trades at around a 17 forward PE, so it trades relatively at fair value right now. Despite the long and painful drop of 2022, we have to remember that the stock market is not undervalued, and the stock market right now, in many aspects, you can say it's almost looking like it's going to become overvalued again. So depending on what sectors you're looking at, right? If you're looking at, say, banking stocks, financials, maybe commercial real estate, or just real estate investment vehicles in general, REITs, then you'll see that these are probably a little bit undervalued right now, or they're constantly going down, right? On the other hand, if you're taking a look at other sectors such as AI stocks, technology stocks, those are a little more, they have a little bit more excitement, and you can almost say they're pushing it overvalued depending on which stocks you're looking at. Overall, we're trading at around a forward PE of 17. So I guess fair value. So don't get me wrong, I'm not a Michael Burry fanboy. In fact, if anything, I never will understand his style. What I'm going to look at here is not a bearish point of view, and I'm also not going to look at a bullish point of view. Now, I know that certain YouTubers have said things like, oh, the NASDAQ is up 20%. You know, we dropped a lot, and now it's up 20%. Now, I could put a meme on the... Okay, let's put a meme. Now, I could say that, yes, maybe we are in a new bull run, right? You could look at technical analysis YouTubers. They're saying this is a head and shoulders, or maybe this is an inverse head and shoulders. You know, who knows, right? And I don't mean any disrespect, but quite frankly, as an investor myself, I don't even care, right? I don't care if the market goes up. If the market goes up, well, yeah, my investments will gain value. That's nice. If the market goes down, it's good for me. I want to buy some more stocks. And if the market stays the same, I'm okay with that as well. It gives me more time to accumulate more shares of stocks that I want. So quite frankly, I don't care. Okay? This is not a bullish prediction. This is not a bearish prediction. This is just my plan. And ultimately, what I'm making this video for is I want to provide a different perspective for YouTube. I want to let you guys know that you can take a more rational approach to this. You don't have to care. You don't have to predict the economy. You don't have to predict where the stock market goes. Maybe we go into stagflation. Maybe inflation stays high, and maybe the Fed's rate hiking stays high, or they persist. They don't U-turn. They don't do anything like that. It just stays at like a 5% something rate. And maybe that's what happens. Maybe it goes higher. I don't know. And again, I don't care. So let's talk about specifics for where I'm at right now. Well, personally, where I'm at is I'm 85% invested, and I'm invested in multiple vehicles, multiple stocks, right? Certain stocks I'm invested in, they don't pay any dividends at all. Other stocks, they pay plenty of dividends, right? But overall, I'm invested in high quality cash flow generating companies. So you may ask yourself, okay, you're 85% invested. What actually happened to you, right? What about that last 15%? Well, the last 15% is, unfortunately, I died, so I couldn't buy it. You see the halo? I'm dead. I'm kidding. So the last 15% is in cash. It's all pure cash. Now, the narrative in the past was cash is trash, right? But currently, at this present time, cash is not that bad. In fact, it's actually really incredibly attractive. I'm 15% in cash, and I'm actually looking to add more cash, whether that be me selling out of certain positions to trim a little bit to add more cash, or me just deploying all my paychecks into cash, right? Regardless, cash is incredibly attractive right now, and let me explain why. Now, you may already know this, right? Certain brokers, such as Interactive Brokers, Fidelity, and even Robinhood, they are paying a 4.4% yield on cash right now. So if you are using any of these vehicles, personally, I use Fidelity, you can get a 4.4% yield on your cash right now, which is incredibly attractive, right? And of course, at any moment in time, you can spend that cash. You can take it out and use it as an emergency fund if you need it. You can use it to buy stocks. You can use it to buy McDonald's, whatever it is you want. McDonald's stock, or you can go buy a Big Mac, whatever it is, right? Right now, cash is incredibly attractive, and specifically what I'm looking for with my investments is pretty much the same thing as what Joe Greenblatt is looking for. I'm looking for stocks that will yield me at least a 6% risk-free rate. And if I can't find that, then I'm just going to stick with cash and I'm going to continue collecting my dividends from Fidelity. So I think what encapsulates the current message and the current mood of the market right now is this screenshot here. So I took this screenshot Friday as soon as the market closed, and AI stocks are flying yet again. If you want to take a look at the video that I made previously about AI stocks, go ahead and click on the top corner of the screen. So after taking a look at that screenshot, I think to myself, okay, well, AI stocks are flying again. Well, what does that actually mean for us? If you are a short-term trader, or maybe you're a swing trader, or you just want to do a little quick trade on Nvidia or those other AI stocks, I think that it's probably not a bad choice, but not financial advice. However, the reason why I'm making this video is because I've seen quite a few people who are buying Nvidia stock because they're actually saying that it's a great investment. Because the stock price is farther down, they think it's a great investment. And I want to talk about that, and I want to caution you guys for a second. So, at the all-time highest, Nvidia was trading at $330 a share. Right now it's trading lower than that. However, don't let that trick you in thinking that the stock is cheaper right now. In fact, if anything, instead of looking at just the number or the stock price, what you should be looking at is you should be looking at it in terms of multiples. And if you look at the multiples in Nvidia right now, it's actually trading at multiples that are very comparable to its all-time highs. So, even though Nvidia is not trading at $330 a share, it is still trading near all-time highs. Let that be a cautionary tale. So, is Nvidia a good investment? Well, only time will tell. But what I will tell you, it's incredibly difficult to justify the current cash flows that Nvidia is producing. And in fact, if anything, we are probably going into a semiconductor down period. So all of these things point towards probably retail investors getting destroyed. At the end of the day, I'm 85% invested and I'm 15% in cash, and I intend to build more cash. That is my plan for 2023. And if this video helped you out, go ahead and click this video over here. This video is going to be talking more about investing in hype and the correct mindset that will keep you from making bad mistakes.